Hello there, folks. Welcome into today's video. Two to react to in this one here. The chart master says, keep selling Tesla stock. Well, why should we keep selling Tesla stock? So that should be a juicy one to react to there. I might have some interesting comments. And then we're going to react to this one here from SoFi. Liz Young says, another market pullback would be the last one. That's a pretty bold prediction. Wow. So I want to react to that one there. Hope you guys enjoyed today's video. As always, thank you everybody that subscribed to the channel. 19,300 plus subscribers at this point in time. I appreciate all of you for being here as always. And let's just jump straight into this.
To drive lower in today's session, touching its lowest level in 2 years. Shares have been cut nearly in half this year alone, and the chart master is firm on his call. Keep selling. So Carter, what are the charts saying?
Yeah,
just sell.
They say kind of keep selling, but I mean, what a mess. Here, just a simple exercise. If you were just to find, we know almost everything is bounced since October 13th. If you look over a broad aggregate like the Russell 3000, find stocks that are making new 52-week lows today. It's a very small group of a dozen or two, and this is not a small stock. Anyway, I have two charts, the exact same time frame. You can draw the lines any way you want, but if I think the lines draw themselves. I mean, what we have here, and this is sort of very symmetrical, that Tesla has respected these lines, and now, of course, we are hovering right here at a break juncture. We actually undercut that low ever so slightly today. Let's just look at the same thing and draw the lines a different way. And some people like to call their formations, name them a head and shoulders, something that's been documented for decades and decades, and that's what this is. Now, how to know how low it will go? The truth is, it's anybody's guess. But we close around 180, and I think certainly 150 is in the cards.
150.
Carter, is that line 180? Do we actually breach that line? And I guess my question is, if for some reason, the stock manages to find enough oomph to get above that line, does it make you more confident maybe that there's hope that that line could actually be a floor for the stock?
Okay, before he answers that and before we get into the rest of the juiciness there with this Tesla part here, okay, I think it's very important to say this to everybody watching this video right now. You might not care about the technicals. I don't even care about technicals with stocks, but there's a massive group of investors in the market, and there's a lot of basically machine trading that is done upon technicals. So why do technicals have any weight in the market? Because people give it value, and they make the machines give it value, and so that's why it has value. Okay, so as silly as it might sound, because I know a lot of people get frustrated by this, so like, shouldn't we judge companies off fundamentals? In my opinion, yes. But in a lot of other people in the stock market and a lot of Wall Street says, not really. Fundamentals are just part of it. But a lot of these folks actually judge more heavily on technicals, especially with these sorts of stocks that they like to trade around. So I don't think it's the right way to do things. I think you should always look at a company's fundamentals and think about where a company's net income's going over time, revenue's going over time, margins, and what the company's trading at now. But you got to understand, all those things kind of get thrown out, and everybody's looking at these technicals, right? And so, yeah, let's get into more of this, and I'll get some more juicy stuff to kind of bring out here.
Sure. I mean, that's the nature. We did actually undercut it ever so slightly, and you can still save yourself, so to speak. But the real issue is twofold. One, it's just how poor the relative strength is. To have had almost all equities globally bounce for the better part of 4 weeks, 5 weeks straight, and to not participate means you're just not attracting buyers, which means people are looking at it, but buying something else. And then the second thing is, let's say it does start to bounce, and it comes to life a little bit. There's so many people who are now trapped above who would love to be out, that you encounter overhead supply on any kind of rebound. It's just, it's heavy. It acts poorly.
All right, Carter, thank you. We'll see you shortly on Options Action. Steve Grasso, you with Carter Worth? Sell it?
Yeah. I'm looking at the chart as
okay. So before he shares that there, okay, why he mentioned specifically it's having trouble attracting buyers. I think there's two core reasons why Tesla right now in the short term is having trouble attracting buyers, and why does that stock just keep going down and not go up, right? I think one, Elon Musk Twitter situation, right? I think there's so many people that despise this whole situation and the fact that he's spending like all his attention, even like, from my understanding, sometimes I don't know if he's sleeping at the office or just like spending ridiculous amounts of time at the Twitter office. Like it seems like almost all his energy is going to this Twitter project right now. And I think that's frustrating a lot of people. And so you definitely have some folks that are just holding out because they're mad. I think the second reason is the worries about the economy in 2023 and big ticket purchase items like vehicles. And at the end of the day, Tesla sells obviously very expensive vehicles, right? That most people buy with a loan. And what's the demand to look like in an environment that's a much, let's call it rougher environment than 2022, and especially obviously than 2021, right? And especially if they continue to work through their backlog over the rest of this year, then 2023 comes around and it's like, okay, where's the demand at there? And so I think that's really why the stocks are, having trouble attracting buyers right now. I think it's those two core reasons right now.
As he was speaking, and the next area of support is 167. That brings you back to 2020 levels, and it could go as low. What I'm looking at is the mid 20s. So 167 stutter step support down to 125.
Wow.
Jeff Mills?
That's a big prediction, 125. I might have to step in there. Geez, it's been many, many years since I've bought Tesla stock. But at 125, I might even have to step in. Wow.
Yeah, I totally agree. I mean, I've been saying to sell Tesla for a while, and I've been wrong, starting to look right. But listen, I think that maybe even some people looking to step into a stock like this say, you know what, maybe we get a Fed pivot, maybe interest rates drop, and then you get a pop for some of these tech names. I just don't think that's the reality. The bond market now is pricing in the same peak Fed funds rate that it was prior.
55%. And almost all that's come this year in 2022.
That soft CPI print. So for the bond markets, nothing has changed. So I would not be wading into names like this that look technically weak in hopes that we get some sort of reversing course in interest rates. I just don't think it's going to happen. So I agree. I would sell Tesla here.
Another issue is that even if there is some sort of reprieve for tech stocks, Tesla might not fall into the category just because of all the other stuff that's going on with Elon Musk, Tim.
Well, and also it's an auto company, right?
Hey. Wait a minute. Wait just a minute. What in the world is Tim doing in Vegas? Oh, my goodness. I need to get back to Vegas. I don't know what he's doing there.
I thought, if anything, we were going to be introducing the concept that auto companies have fallen under a lot of pressure. I realized GM had some positive comments this week about their EV business and et cetera, et cetera.
Yeah, if you missed what GM said, they basically, what Mary Barra over there said, is she thinks their EV business is going to get profitable in 2025. We'll see. That's quite a ways away. We'll see.
Ford and GM are well off their lows. But if you as a guy who's long both of those stocks and think those fundamentals are great and those valuations are at least defendable, you can't tell me that Tesla doesn't get pushed around by the same auto trade and the heaviness we're seeing in the cyclicality. You go housing and then you go straight to autos in terms of where the Fed is impacting the macro economy. And I would also just get to the marginal buyer of Tesla stock outside of institutions has been a retail investor. And if you see the fallout in some of the asset classes, including crypto and some of the high multiple tech, this is the group of folks that were defending Elon and defending the stock at all points. The 3 or 4 big rally points for Tesla over the last 3 years have been an S&P inclusion, a stock split, and of course the good stuff, the profitability that got them into the S&P and production numbers, really the numbers that started to get them when they started talking about 500,000. And so some of those positives are things that clearly are in the price. I'm not sure what those positives really are going forward, especially when you consider the headwinds in the auto sector.
Yeah, so, okay, it was interesting. So, first off, Tim never been behind Tesla, ever. I've watched that show for years, and he's never been behind Tesla. I think he honestly doesn't like it, and Dan, I think, is probably the worst one, but I don't think they like Elon. I don't think they like Tesla. They never have. Now, what I will say about this, I don't know if his strategy makes much sense. He's talking about Ford owns GM, but also is talking about profitability. Well, if these other players are going to sell EVs, they're not going to make any money. They're talking about years and years from now, maybe potentially making money, but they're not making money. So what are you excited about there? And then you mentioned about, obviously, a pullback in potential big ticket purchase items, right? Well, that's going to hit Ford and GM as well as Tesla. So I just don't quite understand those arguments. And if you want to say Tesla trades richer than them, well, yeah, it also is far more profitable on a per car basis of each vehicle Tesla sells versus those. It's not even close, right? And also we know that as far as units go, Tesla's massively outgrown those companies. So I think these are just factors to keep in mind here. Tesla's, and I said this in my big video, I think earlier today on the main channel, right? I said Tesla's a trick or treat in 2023. And I don't even know which it is. It's either going to be a trick and it's trapping a lot of people and their profitability is going to fall in a massive way, or it's going to be a treat where they skate through 2023 and things are just okay and they just continue to improve that profitability. I think a lot's going to be dependent upon the state of the economy. I think that's really going to be more what depends, the company's going to be more dependent upon what's going on in the economy in 23 than actually execution for the company, in my personal opinion. So that's kind of what's going on there, okay? SoFi's Liz Young. Another market pullback would be the last one. Wow, that's a big comment. Let's hear what she has to say.
Recent rally, although maybe not for this week to date, we're down still. We're looking at some green arrows this morning. You think, though, this rally is going to run out of steam soon. Why is that?
Well, if we look at the amount that we've risen over the last month and a half or so, we're up 10% since the end of September. That's a pretty big jump. And look, bear market rallies can be really powerful. I think that if this turns out to be one, this is no exception. But when you look at valuations, and this year has been a valuation story, absolutely. When you look at valuations, the S&P is trading now at 17.3 times forward earnings. That is higher than the 5, the 10, and the 15-year average. We know that over the 10 and 15-year period, most of that time has been spent at zero rates, but it just doesn't feel right for the S&P to be trading at that level in a time when we've really just started to hear about earnings contractions and layoffs. So I would expect that we probably give some of that back. But the good news is, if we do have another pullback in the market, I think it's the last one.
Why?
Because we've now seen a lot of the economic data start to crack. And when you think about the timing of how things usually work, the market typically falls before the economy really bottoms. What we need to see is that economic data come down enough that the Fed gets comfortable with the idea that inflation will actually be taken care of. I think what we don't want to see, and the biggest risk that investors are hoping for, I think, is that the Fed pivots too early. That would be a bad thing, and we'd have to clean up for it much later on, and it becomes a much bigger problem. So as the economic data softens further and we start to really come to grips with the fact that a recession is likely in 2023, that's when the market gives its one last breath and says, okay, we have to regulate where we are with valuations, and we have to set our expectations properly for next year.
Did you see the...
So man, that's... I don't even know where to start here, okay? Making this prediction about one last pullback is the last one, essentially, right? I mean, even as a market bull like myself, I think that's just a dangerous prediction to make, to be quite frank, because at the end of the day, like we don't know what's going to happen with the economy in 23, and we don't know where the bottom could be. What I'm looking at is a construction market that's way overbuilding right now. Record amount of homes being built, record amount of apartment buildings being built, record amount of warehouses all being built, and all these projects being finished up in 2023 into what looks like much of a weakening economy with a consumer that's tapped out, to be quite frank, to the worst levels we've seen since the great financial crisis as of right now, right? And potential big job losses coming in and those sorts of things. So I look at this and I'm like, I think it's a dangerous prediction to make. I'll just put it like that. I think, as far as me going into 2023, I'm just going to be ready for everything. Whatever the market kind of throws at us. If it's a rally year and the economy stays okay and we float through, great. But I think there's significant risk to potential job losses and to a epic slowdown in overall construction as the year just kind of ticks on there. And what does that mean for the stock market? What does that mean for company earnings? What does that mean for the economy in general? Do we see any sort of systemic problems in the banking system, in the financial system? I mean, I just think there's a lot of questions that we don't have the answers to right now that are definitely potentials.
Goldman Sachs call that Steve Leisman was just talking about, that they think we could actually narrowly avoid a recession next year?
Look, anything could happen, right? Crazier things could happen. But when you look at just the signals, not only the signals that the market is giving us with a yield curve at its deepest inversion since 1981, we've got economic data, leading indicators saying things like new orders are contracting, small business optimism down back to COVID lows, and now we've got capacity utilization turning down. All of those things would point to the idea that there probably is going to be a recession. That doesn't mean it has to be terrible. That does not mean it has to be deep or long.
Something she didn't even mention there is stocks are indicating that we're going to have a recession, right? You can talk about yield curves, you can talk about all these different surveys and things like that, but just look at stocks. Tesla's down 50+%, right? Amazon's down around almost 50%. So when you just look at it from this context, the biggest companies in the world, the way they've been hit, they're kind of forecasting that there's damage to come.
Needs to do is reset the business cycle. And really at this point, if that recession is contained to only certain sectors, some of the ones that have felt most of the pain, tech being one of those, then it doesn't even necessarily have to hit all corners of the economy. We might not feel it that deeply, and we won't know about it until it's over. So I actually would welcome some pullback in GDP. I would welcome a reset in the economic cycle, especially one that takes care of inflation, because then we can start on the other side with more of a clean slate.
Yeah, I mean, I appreciate her thoughts there. It's interesting, and I always like a different perspective to hear a different perspective, which that's definitely a different perspective to say, whatever pullback we have next is the last one, essentially. That's a very, very big prediction to make. I just think there's, I don't want to get too confident going into 2023. If there's something we've learned from 2022 is I think a lot of us, including myself, went into 2022 fairly confident. Then January hit, and even somebody like myself, I did the big video about I was planning for a recession, right? And I think if we go back to November, December, I think a lot of us went into that year fairly bullish, right? And then things started to deteriorate, and I think we started to shift sentiment, right? And so with going into 2023, I just don't want to get too excited, about feeling like the market's going to bounce back and all these sorts of things, because I think that just sets us up for disappointment, where maybe that doesn't happen and things don't magically get better and the market continues to be in a tough place and maybe stocks continue to be in a tough place. And if you get your hopes up that, we're up from here, that's not a fun situation to be in. If that happens, I'm happy with it, but I'm not going to get my hopes up about that, because I just think there's so much at play here in 2023 that we've got to be ready for, including, obviously downside scenarios. So that's just kind of my 2 cents on that. Hope you guys enjoyed today's video. As always, I appreciate you all joining me. 19,300 plus subscribers at this point in time. Also, just so you know, if you're not aware, the massive Black Friday sale coming up for the private stock group, to get access to our private Discord chat, to get access, obviously, to all of my different course curriculums, the communities, everything like that, including exclusive videos that will be pinned comment if you want us to send you over the deal as soon as it drops on Black Friday. Much love and have a great day.